Tesla has become the biggest auto manufacturer by market cap, even though companies like Toyota manufacture 25 times more cars than them. And I think to really understand why their market cap is so big and why investors are so bullish towards them, you kind of really have to understand the history. So it takes us back to 2002 when Elon Musk makes the sale of PayPal, which he had majority shareholding of for $165 million. And unlike most of us who would have called it quits and said, hey, I've got 165 million, I'm going to go chill for the rest of my...
I'm done.
How much is that in billions of rands? But that's neither near, that's neither here nor there. Because he is South African. He's a Pretorian gent.
Yeah, he comes from what? Pretoria Boys, I think.
Yeah.
But they don't claim him.
But Elon makes 165 million from the sale of PayPal.
Yeah.
And instead of just chilling, he decides, no, I'm going to start this thing called SpaceX. So this guy has...
Did he start SpaceX back then already?
Yes, he started
in
SpaceX
like
first.
2000.
In 2000.
No way, I didn't know that.
He started SpaceX first. So he has this vision that he wants to go to Mars. He wants to send humans to Mars.
Yeah, like
Such an...
Mars.
Yeah, such an Elon type vision, man. So he founded SpaceX and he aims to launch something into space within the next year. This is where
they already like literally this year, I think it was around June or something, or July, they launched the first non-governmental spacecraft into the International Space Station. So now it's only been SpaceX, NASA, which is the US government, and then China and Russia. It's the only 4 entities that have ever launched someone into the International Space Station.
That's crazy.
And he actually wants to go to the moon again, eh?
Really?
Yeah, he's planning on going to the moon by 2024, I think. But that's a partnership with NASA, I think.
Okay.
Yeah.
I wonder how Jeff Bezos feels about that, since he's also got Blue Origin and they have this
And
competition.
even Richard
thing
Branson
happening.
is also...
with Virgin Atlantic.
Yes, and what's
Virgin
the...
Space? What is it called? It's called...
I don't know. It's they also have
It has Virgin in it.
Yeah,
but,
it's Virgin something. Virgin Galactic.
Virgin
money
Galactic,
game.
yeah.
These names look really good.
Yeah, it's cool, eh?
But let's refocus back to Elon, and I'll talk about SpaceX because the history of SpaceX and Tesla are so intertwined.
Mm-hmm.
So it's 2002, he founds the space company, and then he decides that he wants to send something into space within a year, which is a very ambitious kind of time period. And that would see that recurring on and on just throughout the businesses that he's founded, just the very ambitious time periods that either really happen and they happen really well, or they fail and investors start to doubt them. So obviously they don't launch anything into space within a year because there's so much research that has to go into that. It's so R&D intensive that it can't happen in a year. But around the same period, he goes and he buys a shareholding in Tesla for $6 million.
Yeah, he was actually so for that the Tesla was actually not founded by him, right? Yeah. It was founded by like Martin Urbanard and Mark Tarpenning, I don't know how to say their names. And then he was actually the Series A VC. Gave that 6.5 million, something like that.
And he gave it in exchange for him being chairperson. So that was the condition.
Yes.
He gave it in exchange for him being chairperson. And so that's where Elon's story with Tesla starts. And they have this ambitious thing where they want to launch a electric sports car within a certain time period.
Which is like the same time frame as where Elon wanted to launch the spacecraft as well. So it kind of had like the same.
Did he want to run like the spacecraft thing and
I'm saying like the timeline series where it's like the CEO then was as aggressive as Elon.
Oh yeah,
yeah, and that's kind of why things also were just like a bit shaky. Yeah.
And so, as a result of that, as a result of this aggressive time period, things just weren't working out. They wanted to launch a product called the Tesla Roadster, which is an amazing sports car. The new one is amazing.
Ooh.
Teslas are so nice.
Oh
yeah,
Teslas are so nice.
Just wouldn't get one though, but yeah.
I would get one, just not in South Africa, obviously, because you can't really charge it. But Teslas are so nice. So the CEO, he has this ambitious timeline where he wants to launch the Roadster into mass production, and he doesn't meet it, and other controversies, and then he steps down, and Elon takes over as chairman and CEO. This is around 2006. And then he posts this secret plan. He called it a secret plan, but he posted it on the Tesla blog where he says that he wants to build a sports car, which is the Roadster, use the money he built the Roadster with. Who's the money he got from Roadster sales to build an affordable car, which is the Model S, and use that money to build an even more affordable car, which is the Model 3. And when he's doing the above, he wants to provide zero-emission electric power generation options and so forth. And we see this through solar panels and additional Tesla cars like the Model X, which is a really cool SUV. It's my favorite one. And the Model Y, which we're seeing now.
But I think this is actually such an. Let's talk about like the zero emissions and electric vehicle.
That's the
business
reason
model.
I'm so behind Tesla. It's just how he does that. He gets a R&D team to design these zero electric cars and just these emission technologies, and he releases the patent to everyone.
Yeah,
which I think is really cool.
But that also gets back. But we'll get on to like his strategy on how he actually built and how he structured Tesla. But like with the electric vehicle thing, I think it's important to understand like the reason why electric vehicles fell behind like normal fossil fuel driven vehicles, gas driven vehicles, is not because it's more efficient or so on. The reason for the disparity in efficiency and cost is actually where it starts, like back in the 1980s or even further, when cars started coming out. There was almost similar amount of electric vehicles also coming out. Because,
really?
Yes.
I didn't know
actually
that.
What happened was it's the capital allocator. So a big investment went to the gas-driven vehicles rather than the R&D going into electric vehicles. So that's why electric vehicles fell behind, just because of all the capital that was allocated to gas-driven vehicles. Obviously, when money gets allocated to something, efficiency goes up and cost goes down. Economies of scale and enough R&D makes something more efficient, right? And that's the reason why there's actually such a disparity. And I think that was why Elon was actually driven to go into the electric vehicle industry, because he knew all it needed was electric, was just the most amount of R&D to go into. They just needed a lot of capital to flow into this research. And then all they need to do is scale it up to make it more affordable. Like you're saying, that strategy of first doing the Roadster, which is obviously very expensive, and then bringing out more, making more and more affordable, because they can make it more affordable because there's more R&D going into it, making it more affordable, driving more sales, utilizing the economies of scale to actually make it more cheaper for people to buy it.
It's very funny you talk about their strategy, because SpaceX as a company also has a very similar strategy where they want to secure contracts from the government, right, to send stuff up into space.
You know, Tesla was a big portion of their funding. So they raised like the first 100 million through venture capital and private equity firms.
Okay.
Then they got a $500 million governmental loan from the US government. When was this?
What did they get?
In 2009. They got a $500 million loan from the US government, from the Department of Energy.
And then they also got a contract with NASA, 1.6 billion.
You guys are confused. You're
No,
talking about SpaceX. He's talking about Tesla.
With Tesla. So Tesla actually got $500 million from the US government, from the Department of Energy in 2009.
That was actually after a very tricky period, because a year prior to that, obviously the Great Recession hit, right? So that already was weighing down on Americans. But over and above that, Elon had kept on sending stuff into space, and it wasn't making it, so it was blowing up, was malfunctioning in the last minute. And Roadster was also facing production delays. So people who had ordered their Roadsters for like 2006 hadn't gotten them as yet, because there were still manufacturing delays and they were still figuring stuff out. It's like growing pains within a company. And even so in 2006, when they had that difficult time also with their Roadster, so when Elon became CEO, they fired that Martin Eberhard guy. And then actually in 2009, because Elon started claiming then that he was co-founder of Tesla. Really?
This Martin Oak actually sued Tesla and sued Elon Musk in 2009 to say, listen, this guy's trying to rewrite history. But then he actually settled to allow Musk to call himself co-founder. I think they just paid him a much lot of money.
They probably did.
But this was after he left, and he started really the R&D, and when they got that investment or that loan from the government, and he actually started, Tesla is actually going to make it now because they have the capital backing them to build that economies of scale and the R&D. Yeah.
Yeah, but right before that, in December of 2008, both companies, SpaceX and Tesla, were looking to go bankrupt. It was looking like they were going to go bankrupt.
Yeah.
Tesla with the Roadster and SpaceX because they kept on launching stuff, but they hadn't had a minimal viable product yet. So nothing had actually really launched.
So they couldn't raise any VC.
Yeah.
Because they hadn't had a product yet. And so just before December started, they had money. Elon had money for one last flight into space. And he launched, and it happened. It was successful. And so what had happened was a week before Christmas or a week after Christmas, I can't recall, he then secured a contract from NASA for 1.6 billion, like you were saying.
Yeah.
A contract from NASA to send stuff into space. And then a period after that, he secured like the loan you're talking about right now for Tesla. So there's kind of this legendary story that exists that like, oh my gosh, he took Tesla to space and SpaceX to hell and back. He's the one.
But how many billionaires have had that story? Like even Apple. Apple was also like on a pinnacle where like, okay, let's close it.
Like,
and even Microsoft also. All of these big guys who became billionaires were like a stage where they were just like,
Tesla fans.
It's gonna go.
Tesla fans will tell you that the difference with Elon is that it was with two companies at the same time.
Because you get those Elon.
Yes, Tesla fans
followers,
are loyal. I consider myself a Tesla fan. There's a common saying that Tesla doesn't need to spend any money on ads because their fans just do it for them. Oh my, the owners of the vehicles are so proud of them.
But you know, like YouTubers like just have Teslas and like Jaden.
Yes,
yes. So Tesla has like massive clout. People just it's like almost Apple almost also got that status. At a time when it became more of a luxury brand rather than actually the utility. Even if the utility somewhat so is better, but let's not get into that debate.
I actually really wanted to start talking about Apple,
but let's not do that.
Let's move on.
Actually, I wanted to talk about Huawei next week.
Okay. Right.
So actually, a year after that, 2009, when they got that funding from the US government, a year after that, they actually IPO'd on the NASDAQ at $17 a share. Which was actually the first American car company to list since Ford, and Ford IPO'd in 1956.
That's crazy.
That's literally how many years is that? That's like almost 60 years.
Yeah, that is insane. That's half a century, just over half a century later. Ford,
I mean, but how many car companies, American car companies, are there? I don't think there are any others. It's just literally Tesla and Ford.
No, there's actually a couple. Those people
isn't Chevrolet like an American company?
Listed?
Listed.
I think they're owned by like someone
General
else.
Motors or something.
Motors. Oh yeah.
But like I get the point you're trying to make where especially the motor industry in America, it's a very old industry.
Yes.
And so I could imagine it was a big deal.
It was was driven a lot by the racing and that whole what's that town in that city that's now almost like a ghost town in America, where like all the
no idea, mate.
Yeah, no idea.
In America, where all the car factories were.
Texas,
Detroit.
No, Detroit. All the car companies were there, and all the factories, and it was like a booming city.
Okay.
And now it's like almost like a ghost city.
Really?
Yeah, it's crazy. You need to go watch Grand Tour from Jeremy Clarkson. James May.
It's funny because I watched the video of the Grand Tour, but before like the Grand Tour, they were on Top Gear, right?
Yes.
And then he tested a Tesla Roadster, and he did not like it.
I can't think that it was as fantastic as any cars, any other supercars as they were used to.
Elon was very livid after that, though. He made like outrageous claims, not outrageous, but in his defense, he was like, "No, they set it up to fail. They did stuff to it."
Yeah, they would because all of them are petrol heads. Like they always mock.
It's funny because I saw Jeremy Clarkson on the Grand Tour. He did a Tesla Model X review and he loved it.
Yeah, I know he drew like nice pictures on the base thing.
He really
was funny.
Such a kid.
Yeah.
Wow. And so back to 2010, the IPO $17 per share, and then it starts going up and down.
So his strategy then was to run the company actually as a tech company rather than than a motor or a car company.
How does that work? How do those models differ fundamentally?
So I think we'll get to it, and it makes sense when you look at their future outlook. So at the beginning of the business, they actually started building, or Elon vision was to build this car company, make it like it's built on cars.
Yeah.
Right, but obviously there's a lot went on, and yeah, like there's a lot that happened in between. They brought out all these models, they grew, they built all this cloud, and I think that's why. I think the reason why we thought we brought up this topic was because of like how Tesla was in the news, especially during COVID and this last time, and how their share price actually hit like $2,240 a share.
Insane.
Now on the day, we're recording this now on the 28th of August, which is insane. Just thinking that Elon's over $100 billion worth now because of that, and they listed it at $17 per share. And now they're over 2,240.
I saw a documentary that said if you invested in Tesla, if you invested $4,000 in Tesla like last year in December, your return right now would be like $14. It's crazy.
Yeah, it's insane.
Crazy.
But
before we get there, I think before we get to the present,
let's
I'd like to explore just post their listing. They were very up and down, the share price, because number one, Elon was making, like I said, outrageous promises with each class of Tesla. So each class of Tesla,
he's a very active Twitter user.
He really is. So with each class of Tesla, it'd be like, no, we'll produce X amount by this time of the year, and his staff would just look at him like, bro.
And he's had so much scrutiny, especially with they've had a lot of questions around their accounting practices.
Really?
And, a lot of stuff where big fund managers and stuff say, no, this can't be true. There's a big question on like the lease accounting. And a lot of people say their accounts receivable don't exist, and it's all like accounting fad and stuff like that. And accounts receivable is a big thing. I mean, that's
really
where
like
that's
do a
where
lot of leasing.
Marcus Joost also got in his fraud with accounts receivable fraud. So, I mean, so there's a lot of question on their lease accounting and on their accounts receivable, which is. I mean, and I've heard it on multiple podcasts actually, where people say like Tesla is shaky, and
I think a lot of that narrative, and then him going on a podcast and smoking pot, and then him tweeting that.
And then he also tweeted.
Then he tweeted that he's gonna take Tesla at $420. He's gonna take Tesla private at $420 per share, and he's like, "No, guys, it was a marijuana joke."
Yeah, he did it literally to impress his girlfriend. He literally said, "Okay, I'm gonna take the private for $420 a share."
So you can understand with all of this and these production delays, like bearish investors were just getting excited, and then it was just starting to take out these whole short positions. And all of this commotion is going on. And then in July 2019, the share hit, what did the share hit? $190 per share. In June 2019, not July 2019. The share hit $120 per share. And yes. And then, obviously investors that were very bearish were just really like, okay, obviously Tesla is not going to really make it. And then in the third quarter of that year, they record a surprise profit. So when that happens, everyone just keeps quiet and looks at them. After everything that has gone on, they record a surprise profit in the third quarter of 2019. And
I think that's where the accounting questions started coming in.
Really?
Maybe even before that.
And then post that, they have an event to launch their Cybertruck, which I'm going to buy. Disclaimer, thing looks amazing. And at their event, they're trying to display how the Cybertruck is indestructible and how the windows are bulletproof.
That was so funny.
And they have a demonstrator throw a metal ball at the window and it cracks.
It was so funny, bro. You gooid that thing.
And so the next day, initially the share price drops, but then there's so much commotion happening around the Cybertruck. Everyone is either, when you look at that thing, it's either you really love it or you really hate it. There's no in between. There's no, I really like the industrial design, but that's neither here nor there. But the commotion around it and just the pre-orders. I think he was tweeting like minute by minute of the amount of pre-orders that were coming in. So when 50,000.
And it's actually a clever way how they actually raise money to build the Cybertruck by these pre-orders. So I think they raised like over $1 billion just by
Really?
pre-orders,
Orders.
and they haven't. They only had like a what do you call it? Concept there on
Yes,
stage.
yeah.
So it wasn't they don't have like
The actual
1,000 Cybertrucks in the garage.
Yeah.
They
still
built
have to
that one. They
manufacture one.
bought that one sample, if I can call it that, and then
Yeah.
that one demo, and then through the pre-orders raised over $1 billion, which is almost like essentially crowdfunding.
When you do pre-order a Tesla, do you pay the full price?
No, you pay a small deposit.
Oh, okay.
Yeah. So you actually just buy the right.
your
You buy
placement, yeah.
you buy the right to buy
buy
it
the
earlier.
car.
Also, you buy
Earlier.
the right to be in line.
Yes,
Yeah.
I think it wasn't that expensive even like compared to what the actual price is. It's like 10% or something like that.
Oh, okay. And so
It's kind of like
post
that whole thing of like the ration, not it's not the ration, raffle, the raffle thing with sneakers.
Oh, yeah.
Yeah, where if you win it, then it's a right to buy the sneaker.
Oh,
That's
okay.
what happened.
Oh, okay. And after this, the irony, shares hit $420 per share, and that was just kind of funny when shares finally actually hit $420 per share. And then in quarter four, they also meet their production target for the first time, which is huge. And now short sellers are starting to be scared because
Yeah, now a lot of short sellers like got in because of the scares of accounting. They were like getting skeptic. How is this possible? And so
Yeah.
on. So then obviously a lot of big short positions are taken out.
place. But then everything else is happening within this quarter that's so positive, and the share price keeps rising. And so at the end of quarter four, they report another profit. This is their second, and this is their first consecutive profit, and this is their second profit in the company's history. And then obviously the share price is going up, and then we're seeing an event where short sellers who can't afford to lose more than they've already lost in their position start to withdraw their position. So when they withdraw their position, they buy the share. And obviously that also kind of increases the amount of people that are actually
That
buying
was
the share.
beginning of this year, right? Yeah, so that was the share price, the Tesla share price went up like in one day, I don't know, like over 20% or 25% or something like
Really?
that, yeah, in
Yo.
one day. Or something like that. I remember at the beginning of the year, we talked about it with our accounting lecture, and they like a big reason why people thought that happened was because of a margin squeeze.
Yeah.
And a margin squeeze is basically, like you said, the short sellers have to keep like, so now if you take a short position, you actually have to pay up liquidity. So you have to put cash into an account to actually, like say, to keep your credit right. So
Yeah.
that, to show that you'll be able to pay up
back,
if you
yeah.
lose the short position. Actually payouts go. There's payouts out of that account as the share price goes up if you make a short position. So when it went up that quickly, all they thought was, and your short position closes if your margin account is depleted.
Yeah.
When the share price went up that sharply, all the short positions got closed off because of the margin squeeze.
Wow.
So all the margin got paid out in the short positions
Just,
closed off. And that's also, I think Elon started tweeting then that short sellers are like, there's something wrong with short sellers, like they're the demons or something like that.
There was a point this year where I think it was after they hit like the $1,000 mark, where to mock short sellers, he said that they were selling limited edition Tesla shorts as an actual literal Tesla short.
Yeah, I saw that.
I didn't get the joke at first, and I was like, "Oh my gosh, this guy, dude!" I was like, "Oh my gosh, this guy,
Yeah,
dude."
so it was. I think it was shorts, underwears, and socks. Yeah, it had this whole line. I was done.
Yeah, he said limited edition shorts now available. That was his tweet. what a clown, bro.
Wow. And so that's obviously a reaction to the fourth quarter of 2019. And then in the first quarter of 2020, they opened up China. So they started building a factory in China at the beginning of 2019 because they wanted to tap into. China has the biggest electric vehicle market in the world. And so they wanted to tap into that. And they became the
Yeah, like
first.
Tesla's not even the biggest. I think they only sell like 25% of electric vehicles in the world.
Share. I didn't know that.
They only 25% of the market size or market share
in the world
of electric vehicles. It's crazy, yeah. Well, I think China buys all of the East. The East are they're massive
emerging economy,
in
China.
Japan.
They're
Japan
emerging.
is like almost They're crazy advanced in Japan. They even have
And they have like Toyota electric
driven
yes,
vehicles,
which are like hydrogen driven as opposed to
that's so
battery
interesting
operated.
technology for me. I absolutely love that technology.
That is also really interesting.
Yeah.
But back to the
Take it
beginning
now.
of
Elon is not a supporter of that hydrogen technology.
Oh,
he
okay.
says there's a lot because basically you're storing energy, potential energy in a chemical, and he says there's a lot better ways to do it. But it's a big debate. They say if there's enough money poured into it, just like I said earlier with the electric vehicles,
then
it might be a really, really great energy source.
Okay.
And because the emissions is literally water. So you take water, make it hydrogen, and when it gets used up, the emission is water. Yeah, so it just goes back to water. So yeah,
I can imagine
Anyway.
it's very energy intensive though, the conversion.
yes, that's
of
the
it.
problem. It's
Yeah.
expensive, but you can convert it through other like wind energy and all of that
okay.
can convert it into water because
Oh,
all you do
okay.
is electrolysis. You just have water. You put 2 electrodes in it with there's like this membrane thing that I don't know. They have a special name for it.
Okay.
And then it splits out the oxygen and the hydrogen.
Oh, okay.
And then that stores the electrical energy, and then potential energy gets used up as a battery. So essentially it's a battery, and Elon says it's not a very effective battery,
okay.
because it's only at like 25% efficient, where you get other gases which is like 70% efficient in storing energy, but the emissions aren't.
It will be interesting to
So,
see what
it's very
happens there with enough R&D.
Yeah.
But at the beginning of 2019, Elon then wants to start building a factory in China because they have the biggest electric motor vehicle market in the world. And as he's doing this, he becomes the first private company from outside of China to build a factory without government involvement. So without no government intervention within the borders. Kind of ties back to our conversation last week. Check that out if you haven't. And he becomes the first company to do this, and they start building this factory with the goal of selling the first Tesla at the beginning of 2020. Super ambitious, but this time he actually met it. And so in the first quarter of 2020, they start selling these vehicles. He goes and he launches it. He dances awkwardly on stage. It trends on Twitter. That was funny. Did you guys see that? It was like the most awkward thing ever. When he was dancing on stage in China, when he was launching the Tesla factory there, you should go watch that video. It's so awkward, dude.
But I mean, Elon's
Elon
social.
is Elon, dude.
Yeah, Elon's Elon. Though. Even if you see him on Joe Rogan's show, he's like, the way he responds, he doesn't like. He's not trying to be the best guest ever. He's just like,
he's just Elon.
yeah, but you see,
he was really happy at the launch, though. You should see the video. He's so happy. He's just dancing there awkwardly, and the Chinese people are just cheering him on. Everyone's clapping. But anyway, that
I
launches.
got told to do that.
Yeah. Didn't say that, but I mean, okay.
That launches, and this is all in the first quarter. But like everyone else, COVID starts hitting us internationally, and like every other share or most other shares, we start seeing a downturn.
But before, let's just give like a small short recap on what happened to their market value during 2020, because it's been like really interesting. I got so in January the 10th, 2020, Tesla became the most valuable American automaker to ever exist.
Okay.
With a market cap of 86 billion. They're now over 400 billion, by the way. So then 2 weeks later, on January 29th, or a bit more than 2 weeks later, Tesla became the world's second most valuable automaker with a market cap of 100 billion, passing Volkswagen. And then on 1 July 2020, Tesla reached a market cap of 200 billion, surpassing Toyota's 202 billion.
That's crazy.
Which make them the most valuable automaker by market cap in the world. And by now they double Toyota because they're over 400. They are now at the market cap 417 billion at the time of recording.
That's crazy.
It's insane.
It's so in quarter one of 2020. Back to that. Obviously, we get hit by COVID, but then the Fed has a stimulus package, and that assists with their downturn. We talked about that too.
Massively, yeah.
Check that out if that hasn't. And again, they report a profit for the third consecutive quarter, and this is despite everyone else in the automotive industry really struggling.
Yeah.
They report a profit again. And then in quarter two, because of their recorded profits, the third for 3 consecutive quarters, they enter the S&P 500, and shares hit $1,100 per share.
Okay, then from then, I think it's a very interesting story from the 1,100 per share, because after that stimulus package, there's some news and stuff came out of what Tesla's plans. It was like almost in the mix, but then people started realizing and started opening their eyes of how Tesla is planned to be a tech company rather than a automotive company. So since that, like obviously the markets went wild, and I think over 25% of the world market cap was wiped off in like March or something. And then obviously that stimulus package by the Fed in America pushed up the share prices to actually higher than pre-COVID times. But companies that especially went up were what they call the FANG stocks, which is like basically all the tech companies in America. So Apple, like they just went over their $2 trillion. Microsoft went insane. Amazon went insane. Like those big, driven by tech companies went up. And I think the reason why Tesla went up so much from that 1,100 to over 2,200 now was because people started seeing this them being a tech company. And it's actually interesting. I did some research on this, and the two real ways the two big things I think are driving this is because Tesla is looking into creating like an Uber, like a ride-hailing service, specifically just for Teslas. So you would ride a Tesla, but with ride-hailing, and they would actually charge. They would charge more, but actually they've done research, and Uber and Lyft structures show that users are willing to pay more for Teslas. Now, the big question behind that was actually, well, it would never work because the service won't be easily accessible enough because there's not enough Tesla. So if you just want to leave, you're probably going to wait 20 minutes for Tesla. But then they actually thought the big thing why they're driving this is because obviously Tesla has this big clout behind it. So you would be able to buy a Tesla, and because you are a driver for them, portion of your profit would pay off your car. So because you then buy a car, and then because of through this ride-hailing service, they take more of your income that you make, and that pays for your Tesla.
And like another way,
and that's insane. So then you get paid by your Tesla. You get paid with partly Tesla, if you understand that.
Yeah.
So which I thought was pretty insane.
That is a really cool business model. Yeah.
Unique. And then there's the second one, which they actually looked up was, so Tesla is driven by a lot of software, right? They're spending a lot of time on software. That's why Elon doesn't really hide the R&D behind the physical stuff, like the electricity and the batteries and so on. It's very standard. It's not very, but the big thing is their software. And actually what they're doing is, if they're trying to build like an app store with around the software where you can actually make in-app purchases to upgrade your car.
Really?
So they build in functionality into your Tesla, and so there's like a base thing, and then you pay like a monthly subscription for the self-driving. You add on as an in-app purchase. Then you add, if you want this feature, if you want like this boost, your car can do it, but the software blocks it. But then there's in-app purchase to add that functionality. So now you become like, you can like, it's insane. Like there's so many things that they build in, so you can improve your performance. You can improve all these things. How do you think consumers are going to feel about that? Of like, you're selling me a car that doesn't have everything, but it has everything, but I have to buy additional stuff. How do you think they're going to react to that?
I think that's actually better than, like, for instance, like, the standard we have now is like you have different models with different prices, where you can just get one model that can fulfill all those different variations, but by the
time you get that money,
but
and like, you can use a Tesla for very, very long.
So like, wouldn't be? I think.
Randy, how would you feel if you bought a car that has everything that you need, but it's blocked off because you have to pay additionally for it?
The thing is, you can pay for the things that you want.
Okay.
But like, you wouldn't have to like pay like. Okay.
Phila, so next year you start working.
Okay.
Right. Now you can go buy a Tesla, but you only have to pay 10,000 Rand a month for it. I'm just talking hypothetically,
Okay.
You're paying 10,000 Rand a month for it, right, to get the base model. But because you're only starting to work next year, that's all you can afford. But the year after that, you get a raise. Now you want a better car. You don't want to go and sell your car, lose all that value, and then buy another car. It's going to be a lot more expensive to actually upgrade your car. So now you can buy a Tesla, and they're just making it a lot more accessible to upgrade your car. And because I think the second-hand market for Teslas are quite big, it's because it's like iPhone second-hand market. They give you massive trading value for that, and that's why Apple's like looking into going into that subscription model. We'll maybe talk about Apple another day.
Yeah.
But I think because it's like built around the software and the tech, and it has a long useful life. So those batteries and stuff have a very long useful life. If you take your Tesla in for a service, they don't like check the batteries and stuff like that. They just check your brake fluid. They check if there's any wear and tear on certain parts that they need to replace. It's not like we have to take our cars in every year to get like the oil drain, get fuel replacement, get all those liquid replacements, new hydraulic fluids, whatever you need to and some wear and tear on your brake pads and stuff like that. Obviously, Tesla needs that as well. But we have different. It's a different way of operating with your car than when you have a Tesla. So I think that's what drove this whole valuation to get Tesla to be at like this over $2,200 a share.
Okay.
In literally a month again, they doubled.
I want to ask you guys a question about that valuation, and I guess it applies to Tesla and tech companies in general. Finance lecturers are often very cautious with placing a lot of value on the terminal value, so the value that they think you're going to derive from future kind of things.
For in future cash flow as well.
Do you think the same level of caution should be applied to Tesla?
Well, it's valued now as a company as if it's going to unlock. Like, its PE now is at.
I want to ask what the PE was actually.
The PE now is 1,150. So they're saying at the current earnings, you'll wait 1,100 to get your money back if you buy a share of Tesla now. But they're valuing the company as if their profits are going to go up 50 times about in the next 5 years, which I can understand with an Amazon, because only 20% or something of the world's e-commerce or shopping happens on e-commerce. So there's a big, I think it's going to move out to 80% maybe in the next 5 years.
Especially we're seeing COVID accelerate that.
I mean, Amazon was perfectly positioned for that. So I can understand that their profits can go up so much in the next years. Tesla, I don't know. Maybe this ride hailing and maybe how they structure with their Tesla App Store, all those things, maybe that can drive it. But
if you had $20,000 right now, would you invest in Tesla? Now,
I won't. I think it's
Amazon. Did you think? So people said that a month ago. They were like, "Nah, now surely."
No, but I won't ever, because there are companies in South Africa also that we've spoken about that I think is a good company. I think they do good things, or that it's a solid business, but it's overvalued. Okay. Just because there's a lot of money, there's too much money in it, so it's blown up. And I mean, people get scared at a stage, and I think actually that's what drove their strategy to actually do a 5-to-1 share split now, to get that nominal share value down. So basically, what a share split is, it's just you own one share. It's let's say it's worth $2,000. They split it into, you get 4 shares with no value, and it just splits the value into those 5 shares, because the one you hold, if you buy it for $2,000, it just goes down to $40 a share. Then is that the right math?
Yeah, 40. Yeah. It's
yes.
$400, not 40.
$400.
Yes.
Okay. So you get those. So you bought the share for $2,000. It goes down to $400 a share then, and I think that like brings down the, let's call, fear that can kick in maybe when people see the share price. But I don't know. I don't know the industry well enough to make an opinion like that. So for automotive business, I don't think it's justified. But if you look at it for a tech company, if they find clever ways to build their revenue, it might look like they can bring in, their revenue might go up that much to bring in Apple-like revenues.
How much do you think?
Because it might happen. Just think about if we see so many Teslas as we're seeing iPhones.
I just don't think it's sustainable.
Well, they don't need that many. They need, for every 100 iPhones, they need one Tesla.
Because also they
sell.
upgrade. Yeah, they upgrade.
Do you have the same
Yeah,
revenues?
they upgrade their Tesla models like they do like with Apple phones, where it's like it's not big movements. It's small like incremental.
And the big value driver
yeah.
behind iPhones also is that you can keep it for
Yeah.
actually a long period of time. I mean, you can keep if you have a big enough storage on it, you can keep it 6 years.
But I do think that they can actually, looking back now, they can sustain if they go into the whole service system and the whole thing where they release one product and it's software based, it's
Yes.
software driven, because in that you wouldn't have.
You make in-app purchases, you
Yeah.
upsell easily.
To what extent do you think the other products that they offer, so I know they have a whole solar panel roofing thing happening, to what extent do you think the other products will kind of contribute to their growth? Because the solar roofs are
working
also,
on building like a 1,000,000-mile car or something with a solar panel that you only have to charge like off the...
they're working on a lot of stuff. I know they're working on a huge truck, like an actual truck.
Yeah, truck.
Yeah.
Don't they have a truck? Like, oh, not like a truck, but like a truck.
A truck, like a...
Yes, they're working on like a 1,000,000-mile battery where I think it's like it charges while it drives, and then you only have to charge it after 1,000,000 miles, apparently.
That's crazy.
So, I mean, it'd be insane if you have a car
Like
that you don't ever have to put
But how
any
far is that
fuel.
from where we are today? That's the problem as well.
Yeah,
1,100 days.
10 years, 20 years. I don't know.
I think with Tesla, time will tell, man. It's such an outlier. It's just, I don't think we've ever seen anything like this in the automotive
But
industry.
I think it's very, very interesting because I think the way they're going after it is actually a good way. Are they splitting or they're adding value through the technology and through software, showing that normal industries that you think is traditionally very
Rigid.
very just engineering based, that the software on top of that, or the hardware based, something like your car is very hardware based, that the software on that is an upsell, and the software on that is
a
actually
value add, yeah.
big value add and a massive value add actually. Because I mean, so now you are, I know from some engineering companies, right? They somehow will supply mining equipment to a mine.
Okay.
Right? Their big value driver is not actually selling the machine. They sell it at almost cost price. Their big value driver is the servicing on it, the continual payment on it.
Really?
That's why it's getting, so that they pay continuously for servicing for something that only costs them 1,000 rand to fix. They get paid 20,000 rand.
Wow.
So that's the big value driver, and I think that's almost the equivalent or that upsell of the software.
Yeah.
Of it actually, you buy the car at cost, so it's cheaper, but all the upsell and that is the functionalities that you unlock with the upsell. Adding better self-driving features, adding better GPS features, better in car entertainment features, connecting, I don't know, someone else's car to your car in some way feature, whatever, which I think is quite cool. And that's actually something that they can sell to other electric vehicles also. So Toyota can buy that software from them.
Yeah.
And that then becomes like a
business model on its
Microsoft
own,
type of thing where they also become a car software company. But we'll see. Maybe they keep it like a Apple-like, where it only sticks to Tesla. So you can only have iOS on an iPhone. You can only have Tesla software on a Tesla.
Or they democratize it.
Or they make it like Bill Gates' strategy. That almost, when you talk it like that, then it almost makes sense that it can maybe have that valuation, can make sense.
Okay. I think that's a wrap.
And that's it. Okay, and that's it for today's podcast. We are recording this on August 28th, my birthday, so be sure to, wish me a happy birthday. I'm joking. To all our listeners, to all our listeners, thank you so much for listening. Make sure to follow us on all our social media platforms. Our handle is @FinChatCo. We have a weekly newsletter, really interesting articles, so be sure to subscribe to that. You can go to our bio on any of our social media platforms, and you'll find the link below that. Thank you so much, and we'll see you again next week.